I'm Gwen Preston of Resource Maven. We're here at the Metals Investor Forum in May, and I am joined by Charles Funk. Nice to see you again after you spent a little while sealing a deal for Heliostar.
Thank you. It's been a busy start to the year.
Okay, so Ana Paula is the new focus for Heliostar. Ana Paula, why don't you give us a little bit of the backstory of Ana Paula, and then I'll get to the question that I want to ask you about it.
Yeah, so Ana Paula was discovered in 2010 by Lundin Group. Found a very high-grade core, were very successful. They bought Fruta del Norte and sold it in 2015. And then it's been in companies that hadn't been successful. Operating mines didn't work, or we bought it off Argonaut, who were building Magino, and the CapEx went over it. So we see a high-grade underground mine, and we bought it at the end of last year, beginning of this year.
So it was permitted even, it's taken to PFS level and permitted as an open pit operation, which of course was not built. So lots of data, lots of work done, and a permit, which is pretty exciting. Now you see it, like you say, as an underground mine, and I've spent lots of time with the way you're presenting this story. So there's 4 ways that you think that a mine plan that worked, but wasn't splashy, wasn't good enough to get built, at least, and for other corporate reasons. But a mine plan that worked can be way better in the way that Heliostar is envisioning it. So do you want to take us through those 4? Because I think it's cool that it's not just one thing that you're changing with this to make this asset really good. It's 4 different things.
Yeah, as you said, there's a robust set of economics on the open pit, but we think there's undue technical risk to make that work. So our way, when you've got 50, 100 meter intercepts at 8 to 12 grams, just mine them underground, go to the highest grade, bring that forward first. So the key for the first one is we think we can grow the reserve and the resource.
Right.
There's approximately 750,000 ounces at 5.5 grams in a zone 250 by 100 by 60 meters wide.
I mean, 60 meters wide is phenomenal.
When we saw that, we're like, we're buying Ana
Paula. It screams underground mining. Like, it's 60 meters wide, right?
The alternative is you mine a lot of low grade to get to that later in the mine life. Like, bring that material forward and make money, in a very simple view of what we're doing. And that's the key second step, is because there's never been an underground mine plan, we can't show in the economics the power of those ounces forward.
Right.
So we're doing that mine sequencing work. We'll have that by the middle of the year.
Okay.
And then we took the base case in the network. One of the risks in the open pit is they had to make this sort of low grade halo pay for itself. And so they had to take risks in the recovery of that to justify doing it. And I think they sort of got caught up in also this sort of 1 million ounce goal. Like, it has to be this. We've got a 6,000 ton per day mill we've already bought. But it's got, they're jamming it down one scenario.
Right.
As opposed, and from a company of open pit miners.
Yes.
And so pull it back a step and go, okay, if we extend the decline that's already there, a 400 meter decline, into the heart of the ore body and mine really high grade up front, it's lower CapEx and it's more capital efficient. It leaves some nice open doors on the network. So we'll look to deliver that. We think there's material improvement that could come if we deliver that in the 3rd quarter.
Material improvement, and like you say, simplicity too. The metallurgical process that Argonaut was considering was a bit of a science experiment, a reasonably well-proven one, but it was a science experiment, whereas you're looking at much more conventional methods that you're hoping will also do better on the recovery front.
Yeah, vanilla flotation CIL circuit, there's 100 of them in Mexico. So keep it simple, mine very high grade, a smaller mill. You're only 800 meters from the center of the ore body with the current decline.
Yeah.
That's direct costs $4 million US. So say $6 or $8 million with some extra developments and contingencies. It's surprisingly cheap to get that into production, hence the advantages of the underground.
Absolutely. So, I mean, what's the base case had, I know the project well, I don't remember all the numbers. The base case had an NPV, and you sort of look at the upsides that these things can add, the improved recovery, the high grade early on, the larger reserve or resource, however it plays out, count, and of course a better gold price environment. That PFS was done a long time ago. What kind of number are we starting at? And wave your arms a little about where you think that this project, what a reasonable valuation or NPV for this thing might be.
Yeah, so you can look at the PFS for the open pit scenario. What we're targeting is, I think we can generate a 400 to 600 million NPV on what it is today on 150 million CapEx, which is seemingly a remarkably low number. And that's a function of the investments already gone into the project. But that we paid cents in the dollar for. There's a lot more if you really want to arm wave that we could get beyond, growing the resource.
Sure.
Even our gold price assumptions are still conservative. So a lot more capital efficient approach. And that's what this rescope will deliver this year. So deliver, you're not waiting 2 or 3 years for these. I think we can deliver each of these steps to target this, plus or minus $500 million NPV this year.
And last but not least, financing has been a Achilles heel for companies. Companies, when it becomes apparent that they need to finance, share prices have really gotten hammered. You guys have you crossed that. You raised $20 million. So just talk a little bit about that process, and it probably feels pretty good to have the money in the bank to do the work that you have planned ahead of you.
Yeah, when I sort of joke that people say that, be counter-cyclical, you'll get bargains, and no one tells you they won't give you any money.
Right, exactly.
So we worked really hard, and it was a genuinely difficult job to raise that money. It was 1.5 times our market cap. But we were pretty convinced it was an accretive deal to do.
Yeah.
You're in a market that's not rewarding speculation and junior exploration, or not funding it. And so give the market what it wants, projects that you can move quickly to production, that can grow. And so we were able to attract some very strong shareholders, Franklin Templeton, Adrian Day, Eric Sprott, a number of long-only gold funds who saw that combination of speed and growth. And so, there's a sense of satisfaction in delivering it, not because you got there, but because it gets you to the start line to actually build something. And so that's what we're most excited about, is that we're there now. We've put the first 2 drill holes out. We have, 53 meters at 11 grams. Like, these are spectacular drill results that'll underpin this value. It's exciting from our perspective because we have the capacity to deliver this. That's what I think is great.
Fantastic. Well, you got to the start line. Now you've got your work cut out for you. So thanks for finding the time to be here. I look forward to keeping up with the story.
Thank you very much.